Welcome to Markets Now. I'm Michelle Rourke with Randy Martinson Ag, and a lot of green on the board again this morning. The exception has been cattle, where we've seen just a little bit of back and forth action. But Randy, this rally in the grains, we're looking very good from a technical standpoint this morning, which we'll talk about in a moment. But let's talk about what's been driving it, especially soybeans kind of leading this way. China, South America, a couple of things pushing that market, right?
Right. I mean, you look at the news that we've been watching for a while now, and that is dry conditions continue to, kind of dominate the northern parts of Brazil, and they're not looking at rain here for another week. Well, that means that they're going to be hot and dry, and it's going to delay planting a little bit longer. There is supposed to be rain in the forecast for next week. We'll see if that follows through, but that's the first thing that's helping to support the market. The other is that, China's coming in and they've been buying U.S. beans kind of aggressively over the last, month and a half. But they're also starting to make some significant adjustments to their economy and trying to bring some stimulus packages into play, which should help encourage, some spending, at least some movement of, for their economy, which means that it could increase the demand for products.
Yeah, definitely. They lowered interest rates like 50 basis points and have made some other adjustments. Are going to make more. So certainly that's part of this. I also wonder, are we also maybe trading lower yield on soybeans? Are the yields just not there after what was a pretty dry August in a lot of areas?
I think the top was taken off a lot of the beans, and the yield reports that we're hearing up here in the Northern Plains are coming in disappointing or less than anticipated by a lot of the producers. I mean, so, what we're seeing is 30 to 35 on some of the early harvested beans, and the peas are small. So that's adding a little bit to the support as well, I think. But yeah, I think that's another big part is that the crop just isn't there as Mother Nature kind of trimmed our potential.
So from a technical standpoint, November soybeans, we closed above the 50-day moving average yesterday. We're now above the August high, I believe. Where do you project us to? How far will we run on this?
Oh boy, when we broke above 1035, that kind of opens us up to test that 1085 level now. So that's going to be kind of the next level of resistance. The market's moving pretty good here so far today. So we're not, of course, not going to test it today, but this market certainly has some support underneath it, and it's certainly rallying in a very nice way.
Corn market, is it just following soybeans, or is that market concerned about South American weather?
Well, I think that's got the same issues that the soybeans do. Yeah, I think it's, South America certainly is adding to the support. As they delay their soybean planting, it's going to push back their planting of safrinha corn. And we're looking at a smaller planted crop already. So I think that does impact it a little bit. But I also think the yields are not as strong in the corn as what was first anticipated. As we look back at the USDA's September report, we know that the pod counts and the ear counts didn't quite add up to where the yields were projected. So now maybe we're finally starting to see the truth come in when the combines roll.
Yeah, and we're also concerned because of how dry it got about seed size, right?
Oh, most definitely. I mean, that's where your test weight comes into play. So, right now that is adding to it. And then, up here in the Northern Plains, we can see just how much the crop has changed in a very short period of time. When that heat came in, we needed the heat to get the crop to maturity, but for the stuff that was put in wet conditions and a little bit of poorer planting conditions, certainly dried up quick. And with no root system, it started to burn up fast.
No doubt. So December corn got above the old high of 416. How far do you think we're going to run that market from a technical standpoint?
If we can close above that 415, 416 area, I think that opens this market up to test that 450 level. That's the next level for December corn. So we're finally getting back into some levels that might be a little more attractive for producers.
No doubt. And I think the 100 days right around 432, that's usually a pretty good benchmark as well to get above. So we'll be watching all of those areas. The wheat market, is it following corn and soybeans, or are we trading weather there as well?
Well, I think weather is playing a factor there. I mean, we're hearing, some issues, of course, in the Black Sea region that, they're dry. They're not seeing as many planted acres because of it. We're looking at dry conditions now starting to develop in Australia. That's adding a little bit to the marketplace. The Southern Plains picked up some rains, but, the conflicting reports from what we've been hearing, and they're supposed to be dry for the next couple of weeks. So how much winter wheat will we get planted is going to be the big question at this point. So I think there is, wheat doesn't have a lot of the bull story on its own right now. We're still worried about where quality is going to fall into play, and that's I think kind of keeping a little bit of the Minneapolis market a little on the defense. But overall, I think it is playing a follower with a little bit of fundamentals of its own.
Gotcha. War premium, I should ask you about that because we've had some escalation of the Black Sea War. We've had a little escalation of the Middle East tensions. Are those playing a role in any of the grains, or is that more of an outside, like a crude oil market play?
I think it's more of the crude oil market. I mean, we kind of become immune to the news as far as wheat or the grains are concerned for the war. I mean, if things continue to escalate a little bit, and we start seeing a little bit more of a push, maybe in the Middle East for that conflict, then maybe we'll start to see a little bit more movement, just because that's going to impact the demand area of wheat. So that might fall in and give the market a little bit of support. But at this point, I think it's more of the crude oil.
Gotcha. A couple other things that we're watching that might be impacting the grain trade. One, Hurricane Helene. Will that be something that the market will watch?
Oh, most definitely. I mean, that's expected to be a pretty nasty storm once it comes on shore. One of the things it's going to do is it's going to bring a lot of rain to the eastern seaboard, into North Carolina, into the Mid Atlantic states, and there's a lot of soybeans raised in that area, and it could create a little bit more of a crop problem, for the states of Pennsylvania and in that area.
I also got to ask you about if some of this is money flow. I mean, to have a rally like this during the middle of harvest is somewhat unusual. We usually get harvest pressure, but is there outside market money that is coming into the grains because of either lower interest rates, or are the funds getting out of that massive short position that they had?
Well, I think, the funds are definitely liquidating. There's no question about that. We see that in the Commitment of Traders report. But I do think we are seeing a little bit of money flowing back into the commodities. Well, part of it is that, with the cut in interest rates, a little bit more disposable income and disposable, money for consumers. They're looking at some place to invest money. Well, the stock market and the gold are at all-time highs. Grains aren't. So if they're looking at a value or something that is, has a little bit cheaper price, they're looking to the commodities.
Yeah. And we'll see if they keep buying there. What about the cattle market? It has been very resilient. We've pushed to some new highs for the move. Today, we've been back and forth. Do you anticipate maybe we'll take just a little breather there in the cattle market?
I think we will at some point, but we're kind of sitting in the middle of our technical level. So I think this market's got a little bit more strength to go. I think the cut in interest rates certainly helped. There's rumors that they're going to be another half a point in November. Of course, that's just speculation at this point. But that's all got I think the cattle markets charged up a little bit. We've seen good cash trade. Cattle on Feed report didn't bring in a lot of placements like some were expecting. So I think that is somewhat supportive to the market. I think we'll go up and test another technical resistance, but I do think this market is due for a little bit of a retracement.
All right. Thanks so much, Randy Martinson with Martinson Ag. That is Markets Now.